Ladies and gentlemen, welcome back to the SHAQ Podcast. I'm your host, SHAQ, and today we are diving into yet another billion-dollar headline that's reshaping the very foundation of technology, work, and humanity. But first, if you tuned in yesterday, you witnessed something special. Kevin Gaylord, join us to break down the $17 billion SpaceX EchoStar Spectrum deal and the way he simplified that complex corporate move into clear human impacting insight was absolutely phenomenal. Kevin turned billions into stories of innovation, opportunity, and connection. And today is back to do that again. Because today's story, it's not just another acquisition. It's a $40 billion move. Yes, $40 billion led by BlackRock, Nvidia, and the AI infrastructure partnership to acquire aligned data centers, one of the fastest growing global data centers powerhouses. This isn't about building, or this isn't about, to be very honest, it's not about buildings, it's not about servers. This is about the infrastructure of intelligence itself. What does this deal really mean for the future of AI, for data, for energy, for jobs? And for the very ecosystem of digital life that powers our world. To decode it all, there is no one better than the man who makes billion-dollar stories sound like conversation over coffee, Kevin Gaylord. Kevin, welcome back. It's an honor to have you again. The way you broke down the SpaceX Spectrum buyout yesterday, it was like watching corporate strategy meet human storytelling. And now we've got a $40 billion tech infrastructure chess move on the board. And I can't wait to hear your take. So, welcome to the SHAQ Podcast. And how are you today?
Yep. Great again, Shaq. Once again, pleasure to be on the show and see you. And in this case, here that Diwali is still in full effect outside. Happy Diwali. But this is a very cool deal, and I'm excited to talk about it. Excited to see it play out, and as interesting as the acquisition we discussed yesterday was, this one I think is even more exciting and engaging on a global scale. So should be a good time.
Absolutely. Absolutely. I totally agree with you on that. And we are going to discuss this deal in detail. So, you know, there are many questions lined up for you. But before that, I would want to ask you, how's the weather outside?
Sunny. Now it's actually lovely. This is probably the best time of year weather-wise where I am in North Carolina in the United States. It's today is warmer than the rest of the week. It's in the supposed to get up to the mid 70s. I think it's probably about 60 degrees right now. Sunny, really, really lovely. So how is it there? Of course, it's much. You're in the middle
I
of the
may
night.
say in India, it's raining. It's
Oh, is it?
raining. But but it's a good day. It's a good sunny day and a great day to be on the chat podcast. So thank you so much again for you being uh, the very spirit of billion-dollar deals. Thank you so much for explaining it all. So, Kevin, before we start the session, I want to engage my audience. Uh, Guys, if you're listening this live, just go ahead and put your name and the place you're listening from. And if you've got any questions, if you want to understand these complex things, just type in your questions in the comments, and I'm going to put them across to Kevin. Uh, 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 and he would be happy to answer them all. I have eyes on the comments here on all the platforms: YouTube, Facebook, and LinkedIn. So please go ahead and type in your questions, and we would be happy to answer them all. And also today we are going to break this complex deal into very interesting and very enjoyable insights. So stay with us till the last. So moving forward, Kevin, uh, you know, let's start with the big picture. Let's dive into the session, and let's start with the big picture. What's really driving this BlackRock Nvidia partnership to invest $40 billion into aligned data centers? What does it tell us about the race to own the infrastructure behind artificial intelligence? So let's start with this two questions. The first question would be, what's really driving this BlackRock Nvidia partnership to invest $40 billion into aligned data centers?
Sure. So, what's driving it? Well, I mean, these questions overlap, Shaq. This is a solidification of AI and the marketplace, and where it's going to be and where it is moving forward. This is a $40 billion statement of AI is here to stay. And the reason I say it's a statement is that's the gamble. So unlike the $17 billion acquisition we discussed yesterday, where I said repeatedly there's nothing but upside, there is some element of risk here. Now, my opinion, the risk is exceptionally low, and I think that there's almost certainly, just it's a brilliant expense. So what we're basically saying is the belief is AI is not going anywhere. That it is the future of the way we do business. It is a infrastructure baseline on how we operate globally. So this $40 billion play is saying, well, if this is here to stay and we believe it's here to stay, we want the infrastructure. And what's fascinating about that is, and I want to compare to this. I won't go on too long about this, but if you look back in time, and I'm speaking specifically in the United States, but if we look back, Standard Oil. So you've heard of Rockefeller, right? One of the at the time, I think the richest man in the world, and everybody knows him from Standard Oil. But where he actually made his money, essentially, was on the infrastructure behind it. So it became not just about oil. It's not like he invented oil, right? He controlled how oil moves, how it was refined, how it reached people. And that became the undercurrent of this extreme wealth at the time. So when we're talking about, okay, AI, there's a lot of energy involved. There is infrastructure expense, but nobody more or less has really cornered that market. Well, this company that's getting acquired. So this is Align Data Centers. I mean, they've got over 50 locations. It's meaningful. We're at 5 gigawatts, I think we said, of capacity today, and this is a statement by some of the biggest players out there that they want to, much like Rockefeller, that they want to actually take on how these things are managed. Because if we look, it's actually really interesting timing. It's been a big thing in the news in the last 30 hours or so, is that Amazon, their platform AWS, their hosting platform AWS, which is huge, right? I mean, it's the vast majority of the world's using this. AWS went dark for several hours, and now they're kind of scrambling to explain what happened. Well, that's exactly what we're talking about here, is not relying on external components to support your platform, but rather owning those components. So this is a game changer for this investment group. This is a game changer in positioning them for the long-term run of AI globally. And so again, I would say the only risk here is that AI in some way doesn't continue to evolve and matter. And I think that anybody that's paid any leg of attention in the last 2 years would say that's just silly. It's obviously here to stay. So I think this is it's a bit of a masterstroke actually.
$40 billion, and big players like Microsoft and Nvidia and BlackRock. These are very different companies from each other. One is into Microsoft into software, and I think BlackRock is in. I'm not sure. BlackRock is in power generation. I think electricity.
Yeah, BlackRock I think is a software company actually, but while we're talking, I'll verify that. So you go right ahead. Rather, they're a global investment management company.
Okay. So this is where so this is where the money is coming from, you would say?
Well, I mean, they're probably helping organize it. I mean, Nvidia, Microsoft, XAI. These are companies that have. I mean, they print their own money. They've got so much. So I think that they are probably more guiding it from a sort of a managerial standpoint, or just one of what they're calling the consortium. Actually, this thing's got a name, SHAQ, and this is one that I need to remember because I just learned about it this morning. So it's AIP. It is Artificial Intelligence Infrastructure Partnership. So that's what this new investment vehicle is, AIP. And so that's BlackRock, Nvidia, Microsoft, and XAI, which is Elon Musk. That's a powerhouse right there. So I learned the name AIP this morning, but I promise you, in another year, that'll be a common name for us.
Exactly. I totally believe that. Kevin, out of context, before we move on to the next question, which is based on the same context about BlackRock and Nvidia and Microsoft and what they do and stuff like that. Before that, you've been into $1 billion deals before with Bell South, right? Bell South acquiring AT&T, if I'm not wrong.
AT&T acquiring Bell South.
I'm sorry. I'm just a normal human being, so I keep forgetting. I find it very hard to understand these deals. So just wanted to ask you how this transaction works and how, like we normally do, like you give some money and they acquire the company, or how does that happen? That it does involve the government as well. $40 billion. How does the money give and take happens?
Yeah, so it is an acquisition. So I mean, there is some level of oversight involved, but since they're not discussing a monopoly, I don't think there'll be much of that. They are talking about the structure of this is so it's $40 billion. It is $30 billion in equity and $10 billion in debt. And as we've talked about on the last couple of shows, I tend to hone in on that debt piece because that's what's got to be managed quickly and aggressively. So you're taking equity from one organization and saying we're sort of distributing this to the new organization, but the debt's got to be made up. So that's got to be returned. The equity's out there until they decide to sell, if they ever decide to sell. But that debt has to be managed. So in the deal we talked about yesterday, I think they picked up $2 billion in debt. The deal we talked about last week, it was much more substantial. That was a bigger deal. It was 55 billion, and I don't recall, but it was much more substantial amount of debt. But this is $10 billion in debt, and that's got to be addressed once this is done. And that will be. I don't think they're going to have a whole lot of difficulty doing that with the growth rate around AI. And I think this is a little bit of that sort of. I mean, they're it's sort of taking control of this very popular sort of drug that businesses want and need right now. So there will be they will be taking control and have some power in negotiation, in what they charge for these things. There's any number of ways they can look at it. I doubt, however, that they're honing in on recouping that 10 billion right away. I think they're probably looking more at let's make sure we control the infrastructure of this thing that everybody needs and wants, and then everybody relies on us, and now we hold all the cards. So I like that it is a consortium, uh, and I think that we are talking about, again, a real true powerhouse here when it's all said and done. Um, which is interesting. So I'm going to shift for 1 second because there was one thing I forgot to mention before when you talked about oversight or just red tape. So there are some other interesting players that are sort of wrapped up in this consortium that are not the dominant names. So we've talked about BlackRock, Nvidia, Microsoft, and XAI. But there's MGX out of Abu Dhabi. There's the Kuwait Investment Authority.
Exactly.
There is, if I recall, there is a Saudi Arabian aspect of this. I don't recall who. Apologies, I don't have robust notes in front of me here, but so there are some interesting smaller partners here that could make this one of those things that gets looked at a little closer. Although in the current state of things in the U.S., I'm not sure that they'll have any real challenge moving forward, regardless of who the players are.
Yeah, I totally. It's. I mean, see, I totally forgot to mention about the Kuwait and many other Arab nations have been investing crazy into the U.S. market and into the U.S. economy. Well, Arabs have, a, they've got a fortune, so they do invest in U.S. because it's a safe. Investment for them, and they will get huge returns. So yes, Abu Dhabi is that is Dubai. I think that is the state of Dubai. Abu Dhabi is the complete state, in Dubai being the capital of Abu Dhabi. So they are also a player. They are also investors into this deal. I totally forgot to mention that. And we were concentrating on these players, Microsoft, Nvidia, and what is the other one?
BlackRock and XAI, which is
XA. Exactly. So yes, I forgot to mention that. Thank you so much for letting us know that point as well. Quickly moving on to the next question, which I have for you, which is based on the same context. So the question here is, which I've written down for you. We have a BlackRock, Nvidia, Microsoft, and others joining forces. Finance, hardware, and cloud power. Finance for BlackRock, Nvidia hardware, and cloud power. That is Microsoft Azure. I think Microsoft, which is the same thing, under one umbrella. What does this alliance tells us about the lines between tech and finance are blurring?
I would actually argue that that's not a new thing. I think those lines blurred many years ago, decades ago. And maybe over the last 20 years has become a little more blatant in that approach. You know, if we go back, you know, I like that we took a second and talked about Standard Oil, because you know at a certain point about 100 years ago that was the biggest business in the world. And I think when we look at the last maybe 20 years, we realize that, you know, coal and oil have really been the bedrock of global economy for so long now. And you know, since, well, really since probably the early 1980s, there's been a slow but consistent shift. Those things are still obviously incredibly meaningful, but there has been this move towards technology, and specifically communication and management, you know, data management tools. So when we see that we are moving into something that is really abstract, right? So even the internet, at one point we thought, why would anybody want to use this? You know, in the early 90s, right? This is silly. Computers talking to you. You know, we didn't understand it. Then we sort of got it, and oh hey, it's changed everything about everything. And then right on the well, right about the same time were cell phones, right? So we were still using payphones and stuff, right? And then cell phones kind of came around, and the original conversation around that, you know, was right, sort of the same thing. Well, why do I need to be reachable everywhere? I don't. That doesn't make any sense. That's not going to take off. Well, that's not true at all. That completely changed everything, right? And then when we combined those two and went to smartphones, sort of the same thing, where the onset of Google and other search engines, and you know, it's like, okay, well, I can look at my encyclopedia. These things aren't hard. Nope. I actually remember reading or seeing, excuse me, an interview. Forgive me, I don't recall who it was, but it was from, I want to say, the mid to late 1960s, of a guy I think was an AT&T employee, actually, real technology guy, and his assessment, so now 60 years ago, was, guys, the currency of tomorrow is going to be the speed at which you can move data around, right? So forget just data, just this shift to data. It's all about information, the pace at which you can move information. That was prophetic in the mid 60s, and completely accurate, right? So the whole world shifted to, everything is about how fast we can move information around, how quickly. And now AI is just the next leg of that, which is now saying, okay, well, we can move data really, really fast, right? I mean, somebody can have a thought in Indonesia, and that thought can be fully developed and shared with visuals and everything in moments in San Francisco. So we're already there in terms of speed of communication and sharing of information. Now, what we're saying is, well, how do we speed up? If we think of it, you know, evolutionary standpoint, how do we now say that we can take this information? I'm going to give you this whole huge amount of information, but I still got to consume it. So now I can get it fast, but I have to spend my time consuming it. So now AI is saying, okay, we can take that consumption gap and shrink that down and give it to you in bullet points. We can give you a condensed version. We can pull out just the usable aspects of it. So now you've once again sped that process up. I would argue that there's a lot of social and even intellectual downsides to this, but that's a very different conversation. That said, you know, it's the clear next generation. So for the people who were really, you know, from an investment standpoint, that really got it back in the 60s and 70s, and said, hey, computing and telecommunications are where it's at. That's where we're going to put our money. That's where we're going to invest in the future. Then in the latter part of the 80s and the early 90s, hey, interconnectivity between machines is where things are at. That's where we've got to put our technology efforts and our stacks. And then in the mid 90s and into the 2000s, hey, telecommunications, once again, this is the bedrock of the future. It's all about mobility. You should never have to be unplugged. We need to be available all the time if we want to be. And then search engines with the onset of Google, which I want to say was like 1997. I mean, it's you start thinking about it, it's not that far back. We didn't have search engines. We had Yahoo for a minute before that. I think 94, the first search engine came live, and it was, I want to say Google was around 97, 98. So here you have the next thing, and now we're these things are happening really fast. And once people embrace that, right? Originally, Google was kind of like, what the heck is a Google? Who cares? And all of a sudden, it's the big in the world. And so on and so forth. So now let's skip to right now in the last 24 months, AI and all things tied to it. The difference is, I think this one is so obvious to everyone, right? So there might have been questions on everything else I've mentioned along the way, or maybe you need to have some real meaningful technical understanding. But on this one, I don't think anybody's questioning it. I think everybody uniformly says, no, this is a tool that makes sense for the simplest of users all the way to the most complex users. This one makes sense. It's easy to understand. It's easy to interact with. And yes, there's going to be different levels of educated users, but everybody can use it. You don't have to be a specialist to use this tool. So here we are at a point where now we can say, this is that next currency, that next global currency right now. This is that moment. So I got real rambly, and I apologize, SHAQ, but when, tying it back to, this is a $40 billion, this makes so much sense for those reasons that I just, laid out, that it's the next thing, and it's right now, and it's right here. I'm sad to say, that I wish I had a few $1 million that I could, get embedded in this for my children and my children's children, because this is that time. When people look, sort of joke, oh, if I could take a time machine and go back and I just buy Apple stock. Okay, well, guess what? This is Apple forming now in real time. And with that said, if I'm doing a prediction here, this consortium, and I want to get that name again, AIP, Artificial Intelligence Infrastructure Partnership. If I had, some money, some real money laying around, that's where I would put it right
now. Okay, well, that's eye-opening. And thank you so much for letting me know where I need to invest my money. Whatever I'm making from my live streams, is it possible? I mean, say how much is the minimum amount we should invest into this?
I'm not the guy to answer that question. Unfortunately, yeah, I can see the moving parts and understand them, and I can make recommendations, but I'm not. I don't have a lot of liquidity, and I'm also sort of hyper frugal, so I'm or risk averse when it comes to investing my own money. But I mean, even a few $1,000s might make a difference. So.
Oh, well, that's easy then. That's easy for me. Anyhow, quickly moving on to the next question. But before we move on to the next question, I just want to tell you about something which is from my experience. In the 90s, when I was born, or before I was born in 85, we had this in India. We have in Hyderabad, we've got a small Silicon Valley, and we've got the Mindspace, which looks just like New York City. It's just a replica of New York City there. And nobody, as you have said, that nobody thought that there will be a high-tech city and there will be a boom in the software industry like this before. And to show you that, just want to you know, I just want to show this. Can you see my screen, Kevin?
Yes. 1998 to 2019. Wow.
You can also see a cow moving here.
Where where'd the cows go? That's amazing.
That is the change we've got. This is an old picture which I found online, so I just thought that I should be showing this old picture to the people who are watching this live. So
Hmm.
you know, I mean, say things have really, really changed here in India, and it has changed all over the world. Before the Great Recession, 2008, and this is important. I was very, very small, just 14 to 15 years, and I never knew about this Great Recession. I also want you to speak on what was the Great Recession and how it happened. And before that, the computer industry was booming like anything. Everyone wanted to be an engineer, a software engineer. I mean, they still prefer computer science, but not that much because AI is booming right now. But back then, it was totally crazy out there. If you want to be a millionaire in India or anywhere else in the world, then you need to have that technology degree in computer science. And they have made a very good amount of money. They could retire with a very large amount of money. People who were working from the past 30 years, that is from 1990, people who have migrated. Well, things are different right now. We have to pay around $100,000 to move to US now. But back then it was very easy. It was very easy, and we used to move there, and we Indians, the Indian community, made our lives good, and we worked hard, and we got those degrees. We worked hard, we earned for ourselves, made a good living out of it. But Kevin, before we move to the next question, could you please, say, if I'm not bothering you much with this question, do you can you tell me about this Great Recession which happened in 2008 and do you think that Great Recession, do you think that we are on a verge of a recession again in the coming days?
So I would say that there are recessions, and then there was 2008 and 2009. So we called it the Great Recession as a throwback to the Great Depression of the late 1920s, when global economies collapsed. In 2008, what we had was a housing market bubble. So properties, and it had global impacts, but it was really built out of the United States. Properties in the United States were being uh, one, they were not being valued appropriately, but two, the mortgage, it was really all about the mortgage market. So the loans from the banking systems and so on, to buy these houses were being given out. One, they were being giving out sort of willy-nilly to people who should not be receiving them. I mean, it was one of these things where everybody just got really overconfident and didn't worry about it. Two, they were giving out at that time what was called an adjustable rate mortgage loan, which was typically you got a really, really, really low mortgage rate for the first 5 years of your loan, and then it jumped to whatever figure they wanted it to be after 5 years. So for 5 years, you're paying a mortgage of, let's say you've got a $250,000 house and you're paying a mortgage of, $700 a month, and you're feeling great about it. And at month 61, your mortgage rate goes up to $4,000 a month. And that created this bubble because it was a time bomb, right? As these things were going to explode. Couple that with the fact that the way they were bonding these, so you were actually betting in favor of the quality of the mortgage market in the United States from an investment standpoint. And this is a much more complex conversation, but you're able to invest in mortgage bonds because they were considered extremely safe, but they were becoming not safe. That's the bubble. That's the fake thing. So people are confident putting hundreds of millions of dollars into the mortgage bond market because it was always considered, hey, you know what? It's slow moving. You're not going to make a lot of money on it, but you'll never lose your money in this. And unfortunately, because the quality of those mortgage bonds was depreciating rapidly through these adjustable rate mortgages, as they started to hit, as that 61st month started to hit, people would default. They couldn't pay it. I can give you $700 a month. I can't give you $4,000 a month. So they just stopped paying. So the bank had to take these properties back. Those mortgages default. All those bonds started to fail. And once the dominoes started to fall, the banks virtually collapsed. And that happened globally because when we get into the global market, these banking systems are intertwined, these investment systems are intertwined. So even though the properties were in the United States, the financial impact was much broader. And there was a minute where it looked like the United States, as well as the entire world economy, was going to collapse. So that was in, again, 2008 and 2009. What ended up happening is a lot of countries did a lot of things, but the United States, the government did a bailout of these institutions and provided the funds to survive or weather the storm. And some of those monies had to be paid back, some didn't. And this was controversial. Obviously, if you're going to spend trillions of dollars, everybody's going to have something to say. But my opinion is, it was what we had to do at the time to survive it, and it probably saved a lot of countries from total collapse. So that's the Great Recession. It was about a housing bubble. Now, where we are today, are we looking at another recession? So I say there's recessions, and then there's that's a different monster. A regular, more boilerplate recession, which you see those every 20 years or something. It sure feels like it. I don't know, Shaq, and I may not even be the best person to answer that question. I can tell you that there are, I'm searching for my next corporate venture, and what's very interesting is as I'm interacting with a lot of corporations and a lot of peers and former peers, is finding a change in the confidence level of the marketplace in the near future. So I'm definitely seeing a lot of people being skeptical about the quality of the marketplace over the next year or two. So that would, to me, be an indicator that we could be seeing a recession. But if we actually look at the stock market, aside from there's been volatility, if we take a big step back, it's actually been quite strong. So I don't know. I don't know. I don't know. I want to be an optimist and say I think we're okay. But it's still a time for caution. That said, these moves that we've been talking about the last couple of days, these are good. I mean, this is good stuff for everybody. Growth in the AI market is good for economies and good for business. The investment that SpaceX and Elon Musk just made, or are these things aren't solidified, but that are in the process of making, these are good for economies and good for business. I think there's and when the gaming, the one we talked about last week with the acquisition of EA Sports and so on. I mean, these are typically from a macroeconomic standpoint, these are good things. So people are spending money, that helps. So that was really left field for the purpose of this podcast, but hope that helps clear it up at least.
Thank you so much. Well, on a serious note, uh, Yeah, there have been a significant rise in layoffs, and also I can feel I am a part of this corporate or the business now, doing podcast and everything, doing my research, doing everything. I mean, say I explore things from politics to business, everything. I also feel the same, and I totally agree with the points you've made here. Moving on with our discussion, coming to the topic again with the next question. And thank you so much. That was an out of context question, but thank you so much for answering that. So, moving on with my next question, which is based on, as always, the theme of my podcast, humanitarian side, the human element. So, Kevin, one thing you do brilliantly is connect the human dots behind big numbers. How could this deal impact workers, engineers, innovators on the ground? Uh, to rephrase the question or ask you, whole in whole, does this deal is going to create more employment opportunities for people all around the globe?
Short term, I would say no. Long term, I would say yes. So short term, I think this is about let's grab this thing while we can before anybody else sort of figures it out, and then we've got it. How aggressively they expand on it from an infrastructure standpoint, I couldn't begin to speak to that because I don't know what the needs are. I know that this this business that they're purchasing again, what's the aligned data centers? You know, they're quite large, and I'm assuming that they are adequately large. But I mean, if they need to grow it, then that could translate to new jobs in the hundreds to thousands range, maybe. But I would guess it's more about let's go ahead and get it under our umbrella now, and have it, in the fold. I don't think it's going to be a big change. Um, I don't think you're going to see a lot of job losses or gains out of this initially. Long term is you're creating sort of this AI powerhouse, and I think that could translate to a lot of jobs, a lot of opportunities as the this new consortium grows and expands their footprint and their creativity, and then if they do well and all the money that comes with that, and that tends to create more growth, and I think it could absolutely over the next couple of years translate to possibly even meaningful job growth. Um, I just don't think you're going to see a lot of change in the near term.
Okay. Oh, well, that's um, good to know that it's going to create some jobs in the coming future, but not right now, is what you're saying.
That would be my best guess. Yeah.
Okay. Uh, I mean, say, if in case, uh, I mean, say, do you think that we have the need to upskill ourselves? We need to invest more time and money in learning AI skills. To be very honest, should we prepare ourselves for the future, learning AI?
Absolutely. And, some of this depends on where you are in your career and what your goals are, and but absolutely. So I have a good friend and colleague. We were on the executive team together for almost a decade, and he has taken on, just in the last few months. He started going to MIT classes for AI, and he is 55 years old, but he is looking at it as, you know there's no scenario where I can't be a master of this moving forward and still, add 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 the value that will compensate me in the way that I want to be compensated. So he's been going through this, and I think he's just a few weeks away from graduating that. And what's interesting on a personal note is he's going to take that talent. He's already very, very talented, but that knowledge and incorporate it in with the Ops Sherpa consulting as well. So he's gonna head up the AI arm of that while we're playing around with that consulting business. But yeah, it's my point is, even at 55 years old, he's it's nope, you've got to get cutting edge on this because it is the future. One of the things that's been very interesting that he's shared with me through this is the criticality of what they're calling prompt engineering. So as we use AI, it's the secret sauce in AI is how you ask it what you want to do, right? So there's very big difference between, say, generate. Let's just say generate an image of a dog versus generate an image of a dog that is X size, that is emblematic of this, that's this color, blah 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 blah. And how do you do that? That prompt engineering. How do you do that in the way that's going to get the highest quality level of return, ideally with the least amount of effort and lift to get there? And so that, I think, at the smallest level of this is going to be the most critical immediate skill for everyone. So I'm not a technology guy. I'm not going to be a technology guy. I'm an operations guy. I'm a leadership guy. That said, I promise you, I am working very hard at becoming a high quality prompt engineer to be able to utilize the tools for success. So I took a course as well through the Wharton Business School online it was AI fundamentals for non-data scientists, and it's fascinating to learn the quick history of where we're at, how what goes on under the hood, and how things interact, and then take that and couple it with. By the way, this gentleman I'm talking about is Darren Leese, who I think we're going to have him on the show at some point here. But so he's taking my sort of foundational knowledge and beefing it up, which is really really fascinating to me. So yeah, I think everybody has some level of responsibility to learn and expand on this. Depending on what your direction is, though, do you need to go out and know how to build AI platforms for specific businesses? Probably not, unless that's your direction. But you definitely need to know what the various solutions are in the marketplace, how to interact with them, how to get results. I mean, it's basically a language that you need to learn to speak, and I think everybody has that responsibility. So that's it.
Awesome. Thank you so much for that brief answer and letting me know about that upskilling is important. And I think I should get a degree as well in artificial intelligence now. I need to invest. I mean, say I tried to search for a free degree in artificial intelligence, but was unable to find one. But there are lots and lots of certificates for artificial intelligence which are free, and also in collaboration with the Indian government, Google has given a free Google AI exchange program for people in India. So that's absolutely free. You also get to visit the Google office. I'm going to take a video around there and I'm going to send it across to everyone.
That's fantastic.
So and also I'll be waiting for Darren once he completes his graduation. And do you think, I mean, say he took a full course for 4 years?
No. This was a standalone course. So it was, I don't know how many months long. It was basically a semester. So
6 months.
it's a certificate instead of a degree.
Okay. And yeah, anything can help. Right now, we are just, getting to know AI. Most of the people don't even know what is AI. I mean, say, you know, to be very honest, most of the people does not know the applications of AI and what's going on with this and things like that. But it is growing fast. It is growing very, very fast. If you ask me,
Yeah.
and also,
Oh, I'm going to just throw in there. So I talked earlier about comparing this particular $40 billion acquisition to how Rockefeller managed, Standard Oil, right, 100 years ago, and by owning the infrastructure, being able to monopolize that and make an unparalleled fortune. Um, I wanted to also juxtapose. We talked a little bit yesterday about the Bell operating systems in the United States and globally, and I used to operate in that world, and so I know quite a bit about that. And if we look at that, and AT&T, which was the first Bell operating company, which was a American Telegraph and Telephone, is what AT&T stands for. So um, what they did that made them so special, other than obviously the belief in the future of the product, which is what we're seeing today with AI, is they got the wires run. Right. This was the secret sauce. Was you've got to. It doesn't matter if you understand or you can create two telephones if you cannot physically connect them to talk at that time, right? In the 1900s. So when we start thinking about that, it became, well, really, an AT&T has been a dominant global corporation for well over 100 years. So how are they able to pull that off and maintain that? Well, they created and owned the infrastructure, and then later, even through acquisition, have continued to be meaningful in the same vein. So I wanted to compare this particular acquisition to those two companies, and I want to share just let me see here. See if this works. All right, are you seeing my? Wait, hang on. Nope. Let's try this. Tell me if you see. Do you see that? You're muted, and I believe you're saying yes. You're still muted.
yeah, I can see that.
So this was just as I was talking about it. This is what I've been as I look at my other monitor. This is what's been just staring at me, which is just the idea, with the exception of forgetting the E on infrastructure, is these are. I like comparing this deal to these two particular, not just organizations, but platforms, right? So Standard Oil and then AT&T. Here we are today. Again, I say, imagine if you knew at that time what Standard Oil was going to mean, or what AT&T was going to mean. And I believe that's exactly what this is. I think that's how big of a deal this really is. This particular organization is really going to be just that substantial moving forward. So again, AIP, Artificial Intelligence Infrastructure Partnership. I think that's the potential level. So a true financial economic game changer.
Awesome. Thank you for making that simple and breaking into understandable points. Thank you so much for that brief answer. Kevin. Kevin, before we move further, to be very honest with you, I have some questions. If you kindly permit me some more time, so that we could
Sure.
continue the session. Thank you so much.
Mhm.
So moving on to the next question, which I have for you is, apart from the human, we have discussed about the AI hype. We have discussed about the importance of upskilling right now. We have also discussed about the human element that this is going to create jobs, but not right now. But we should be ready for our turn and upskill ourselves. Now let's speak about the energy and the sustainability. So, my question to you is, data centers consume massive amounts of power. With sustainability becoming a global priority, how will deals like this balance AI expansion with environmental responsibility?
Yeah. Well, wow, that's a that's a very tricky question, Jack. It's a bit loaded. I on the surface, I would say that energy management has always been the I mean, there are two things in history that have caused the majority of wars, and that is religion and energy management. Now, you can argue politics, but I think that's just an offshoot of the other two. Um, so I don't think anybody would deny that crude oil, has been the driver of every meaningful global conflict in the last 40 years.
Exactly.
Um,
I totally agree. Yeah.
and you know there are other things, but energy is going to continue to be a challenge here, especially when we're talking about an industry that is consuming more than we have anticipated before. And so I think that there is a responsibility, and there is um, I don't know if I want to go all the way to urgency. I don't think we're at that yet, but there's a responsibility long term to continue to try to uh, innovate on the energy development standpoint. From the energy development standpoint, I understand. Forgive me, it's been several weeks since I read about this, but that they're just at a university in the United States. They have just, for the first time in history, been able to. I don't know if you're how much you know about cold fusion, but the concept is that you're able to, without a nuclear reaction, you're able to generate more power than you put in, is always the goal, and to do it uh, through a safe uh, a safe version, I guess. Of I'm not going to explain this well at all, but anyway, they've always people have been trying this because this is basically the answer to like free energy, right? So this is the solution to half the wars ever here. And there's a university just a couple of months ago that was, for the first time, they were able to produce more energy than they put in. Uh, Now, this was on a tiny scale, right? I mean, itty bitty, but it did occur. So now, if you can ramp that up, and this is me being optimistic and hopeful, if you ramp that up and we can get into a world where we have a cold fusion solution for energy creation, then all of these problems go away. That's a little bit of an offshoot. There's obviously the renewables. I know that solar has been growing and growing and growing, and there's even some new technology on that front. One of the big challenges on the solar side is that the infrastructure is expensive to get going, and once you've got it, it can pay for itself over time, but it's a long term commitment. There's been some development on that front where they're able to uh, create those solar panels much less expensive and less heavy, and if that continues, I think you're going to be able to expand greatly on solar power. I know uh, in some places in the Middle East and Northern Africa, there have been development of large scale, in these large desert areas, large scale solar farms that are going on that are creating massive amounts of electricity. I'm basically saying all these things, these innovations and some out of the box thinking, this stuff has to continue before we reach any kind of a tipping point, where we're going to be in trouble. That said, this particular acquisition is definitely very smart on that front, because these 50 plus data centers are set up for their level of consumption already. So this is again a very, very smart play versus trying to build something out and then finding out you have challenges, with your electricity needs and so on and so forth. So I feel like I answered your question somewhere in there, Shaq.
Yeah, you did answer my question. And thank you so much for that brief answer, Kevin. To be very honest with you, normal person like me would think that if you have more data centers, you wouldn't have electricity for your domestic use in your homes. I mean, say it's going to disrupt the power supply, or it's going to affect us in some way or the other. But thank you for briefly explaining what's what and what's going to happen. And I hope my audience and I did get the answer for that. Thank you for explaining that. Moving on quickly to the next question about the global ripple effect. Now, my question for you is, Kevin, Aligned has a presence across Americas. How might this acquisition shape the data center race globally, especially for emerging markets like India or Africa? Like India and Africa, or any other nation like Indonesia?
Yeah. So as I often say, as we've talked about, large acquisitions and equity infusions, they have a tendency to change behaviors in markets. And in this case, we're talking about the global marketplace. What I would, obviously it's just a guess. What I would guess is that you would take countries specific. India is a great example, but so various areas of Africa as well. But India is a fabulous example because India tends to pay attention to trends and either create them or at least jump on board quickly. And I think we've really seen that probably since the late 1980s and early 90s, when India really made themselves a global player. Interestingly enough, India is now the most populated country in the world. So you can't overlook that. But I would guesstimate at this point that India will be watching this deal and looking to either partner with this consortium or take it on their own to start developing as many of these as they can, if nothing else, because they might say, hey, these guys just are buying for an exorbitant sum of money, are buying 50 data centers. Let's go build 5,000. And what are we worth now? So I think historically India acts very, very strongly on this front. I would expect them to do the same. Africa in general, it's a whole continent we're talking about, but is moving in that direction as well. Especially South Africa, I think, is really starting to take on a global footprint more than they have historically. So I wouldn't be shocked to see it happen there as well, probably on a smaller scale, but same concept. So yeah, I think it's probably coming.
Awesome. Thank you so much. And it really, I really like the fact that uh, you praised India so much. So thank you so much for that. And yes, we will have a keen eye on this deal. India would definitely have a close eye on this deal, and would want definitely want to partner into this deal. And also, to be very honest, I'll tell you one thing. Well, I run this show right now. I'm running this show remote, and I'm running the show from India, south of India, which is Hyderabad. And people who are viewers of my show here, they are a big fan of your podcast. So they like you so much. They really love you. Yeah, Kevin. Kevin, do you speak Hindi by any chance?
I do not, nor have I ever been to India, so that's on my list.
It is.
Oh yeah.
Mhm. And I'm going to be your host, just like on the SHAQ podcast. I'm going to host you while you're in India. I'll be there, meeting you in person. Or while I am in the States, I'll definitely come over to your office, or I mean, say your residence, or uh, wherever it is feasible for you. Anyhow, I'll do an in-person meeting for you for sure, and I'll shake your hand and I'll ask you for a job. And offshore.
Fair enough.
So,
Fair enough.
uh, sure. When the time comes, I'll definitely do that. So, moving on quickly to the next question, which I have for you is this is based on the investment strategy insight again, Kevin. And my question to you is this: BlackRock's involvement signals long term financial confidence in AI infrastructure. What kind of ROI, return on investment, or timeline do investors realistically expect from a $40 billion commitment of this scale?
Yeah, so this is a little different than the other ones we've talked about because this is definitely the long play. Um, you're talking about saying we're building the foundation, or we're acquiring elements of the foundation to couple with what they already have to position themselves to be the dominant global player in what is the strongest emerging market anywhere. So I don't know, Shaq. To be honest with you, I would be guessing, and I don't even think I could hazard a good guess on what that looks like in terms of investor expectation. Um, it's definitely a long play. So I don't think this was a difficult decision to make, in spite of its size. It's a very smart play. Um, but how fast they're looking on getting a return, that's very tough to say. I would guess that initially they want to resolve the $10 billion in debt that they've allocated out of the 40 billion. So I think step one is let's eliminate that $10 billion in debt, and then start growing the equity piece. But I couldn't even guess what their actual ROI timeline looks like.
Okay, fair enough. I mean, say, yeah, it's very unpredictable, to be very honest. Uh, uh, it all depends on the stock market and stuff like that. So leaving, I mean, say, moving on quickly to the next question, which I have for you, and which is based on the Nvidia factor. Okay, so Nvidia has dominated AI chips. Now it's entering the data center ownership game. What does this shift mean for the company's long-term strategy and control over AI ecosystem?
I think what's important for that company in particular, for Nvidia, is it makes them it changes them to being vertically integrated. So yeah, they're a chip company, but now they're a chip company, and then they have the computing and the hosting element that they haven't necessarily had in the past. So it's a very strong market expansion for them. I would say it's that's another company that it would be nice to have some stock in them. They're already solid, but now they're going to, with market expansion, they've opened the door from, yeah, we're a chip company to we're a lot of other things. We now we can do, again, they're sort of vertically integrated. Now they can take those chips and expand outward from there, where they haven't really been able to do that in the past.
Okay. Okay. Thank you so much for that brief answer, Kevin. Kevin, I quickly have five simple questions for you. If you permit me, I'll ask ask them. It's five more, five more. Okay, and they are very simple. I mean, say like it, you will find it very very simple. So five questions, and the first question which I have, which is a very simple question, which how soon can we expect to see the real impact of this deal? Are we talking months, years, or decades?
Months to years. They're going to benefit from it immediately. But as far as visible impact, which would be pricing model changes, innovation changes, maybe further acquisitions, yeah, months to years, probably closer to years, but not decades. No, things will happen quickly. I would say 2026 will probably be a very exciting year on this front.
Okay. The next question would be, if you were leading this acquisition or this deal, what is the one positive thing you would do, and what is the one negative thing you want to highlight in this deal?
I'll take that in reverse order. I think the only negative is and we talked about this earlier, is a slight element of risk. And the question is there some version of an AI bubble? And I don't personally think that there is at this point. Now, could we get there? Oh yeah. But I think this helps avoid that by, I mean, there's so many AI companies now. I mean, there's really, if we look at the major players, there's only a couple, but I think this consolidates enough power that you're gonna have some very solid foundable organizations delivering AI, and I don't think there's a bubble danger there. In terms of upside, was that the other part of the question? I've kind of lost it there. Yeah, you're muted.
We spoke about the negative term. Now we'll speak about the positive.
Yeah. Well, it's kind of the same thing. I think that you end up with it's a little bit of the reason that people, in light of what happened this week, that so many people prefer to use AWS as a hosting platform, because it's safe, it's huge, it's got redundancy, it's very unlikely for them to have any downtime, again, in spite of what just happened. So there's a comfort and a consistency with that. What's happening with this model establishes basically the same thing. So we think of AWS as being this massive dominant player in the hosting space, and I think you kind of, that's the positive outlook, is you kind of end up with this new version of that in the AI computing space.
Thank you so much for that answer, brief answer, Kevin. Thank you so much for explaining that in detail. And I totally agree with the points you laid out. Quickly to the next question. Do you think, with so many strong players involved into this deal, do you think that this is taking us to a monopoly kind of a situation here? So what do you have to say about that?
I don't think so at this point. No, I'm just going to say no. I don't think that there's a lot of jeopardy of that at this point. You're not bringing together all the major players. You're bringing together a few of the major players here. Um, so no, I don't have any monopoly concerns.
Okay. Okay. Next, second last question, which is going to be quickly on your to you.
Mhm.
Do you think this deal will make AI faster, cheaper, or more accessible to people and businesses?
Yes, to all of those. I don't think we'll see that immediately, and I do think it will take some time. So there we might be talking. Let's. I'll go back to my statement of I think 2026 will probably be a very exciting year, and 2026, 2027, I think we'll see some changes as a byproduct of this because ultimately, when they work out all the kinks in integration here, it should reduce their overhead, which allows for some competition, which generally changes the overall marketplace to be better for everybody.
Awesome. Awesome. Thank you so much for that answer as well. Now, last and final question, which is related to the world leaders and politics. If you if you want not to answer this question, you can you can choose to. So, finally, the question is finally, Kevin, if you had to look 5 to 10 years ahead, what does this deal symbolize? Is this the foundation of a new AI industrial era? And what lessons should smaller nations, startups, and leaders take from it?
Yes, I absolutely think this is the. I don't think this particular deal is the start of it, but I think we are squarely in the middle of this new era of AI dominance globally in the marketplace. Um, and how does that translate out to smaller economies? Well, one of the things, and India is by far, I mean, they're not. It's not a small economy. That's a huge economy. But I think it's a fair example to say recognizing that this is a global shift that is happening in real time and allocating the resources that you can to support this direction over the next 5-10 years, whatever it is really going to be not necessarily critical as much as there's an opportunistic vantage here. So like I said when we were talking about India a minute ago, you know I'm confident that India will be building out these data centers and already has obviously a lot of data centers, but we'll follow this model to make sure that they're included. And I think smaller countries and emerging economies, um, it's very that's a tougher nut to crack because you need a lot of capital to get this done. But I'll use an example of um, uh, Bogota, Colombia. So Bogota, Colombia, not a incredibly wealthy area by any stretch. Um, Not a ton of business infrastructure. But one thing a couple of years ago that they started going after was business process outsourcing, so BPOs. And so they elected to start building out these contact centers and building out infrastructure to support this. And in very little time, Bogota has become a meaningful player in the BPO global community, bringing lots of jobs and opportunities to Colombia just by deciding to invest in themselves and say, hey, we've got people, we need phone lines and power and computers, let's set this thing up and educate them and then manage outcomes. And so now Bogota. And another example would be the exact same thing in the Dominican Republic, another area that is, financially challenged, and yet they're a meaningful player on that front. More recently, South Africa has decided to kind of go after the BPO model and start making them themselves. Um there are other countries, but these are just examples of doing the most you can with what you've got. So these are relatively low cost investments that allow them to align with global initiatives. BPOs have been so big for quite a while, but I mean it's really gotten very big in the last say 10 years. And I think that if you're an emerging economy, that's probably the approach you would have to take as well, is figure out what can you do to stay relevant and stay involved, versus doing nothing and sort of throwing your hands up in the air. I think there is a solution. Now, what is it? I don't have that answer. I'm just saying I think that's how they have to approach it.
Awesome. Awesome. Thank you so much. Thank you so much. And it's also in line with our discussion coming this Thursday. And that discussion is going to be all about the KPOs and the BPOs. What is business process outsourcing? What is a BPO model? How it works? Who are the players involved? And, how it benefit the people of the host country. So everything will be revealed, and everything would be discussed on that show, which is going to be on Thursday, same time, 10:30 a.m. New York time. So to my viewers, stay tuned for that as well. So Kevin, uh, you know, I just want to say what an incredible deep dive that was. Kevin, every time you join me, you don't just decode billion-dollar deals. You make them make sense to everyone listening. You have this rare ability to take complex financial headlines and translate them into human stories that touch lives, shape industries, and inspire innovation. From SpaceX game changing Spectrum buy to today's monumental 40 billion alliance between BlackRock, Nvidia, and aligned data centers, you have shown us how the future of work, technology, and humanity are truly being rewritten in real time. On behalf of our entire SHAQ podcast community, Kevin, thank you once again for sharing your brilliance, your time, and your heart with us. You make economics feel alive, and you remind us that behind every number, there's always a human story waiting to be told. To our listeners, if you enjoy this episode, don't forget to follow, share, and leave your thoughts in the comments. Let's keep the conversations going because the future is happening right now, and together we are here to understand it. This is Shaq signing off from the SHAQ Podcast, where we read between the lines of billion-dollar deals and uncover the heartbeat behind every headline. Thank you all.